as we start future-proofing our business for the future.
One last question on modern trade.
Abneesh, sorry to interrupt, but I think it's only fair we come back to you later. Let's give the opportunity to others on the call, and time permitting, we'll come back to you.
Sure, no problem.
Thank you.
Thank you, Mr. Roy. The next question is from Mr. Prashad Deshmukh from DSP Merrill Lynch. Mr. Deshmukh, your line has been unmuted. You can go ahead and ask your question, please.
Yeah, my first question is on how much of the revenue actually comes from brands which are owned by Unilever, and how has this percentage actually changed over the last 2 or 3 years when the royalty was revised before this?
I think, as far as this is concerned, it is pretty dynamic thing. I'm not sure that, we get into those specificities externally. I think I understand the context of your question, which is in the context of the new royalty agreement. And is that, I'm assuming the context of your question is the new royalty agreement? Is that correct?
Correct.
Yeah. So I think the most important part is, as we very transparently shared, the rationale for the change, what is the benefit that HUL is getting and will continue to get, and from a royalty cost perspective, what is the change that this agreement will entail. As I mentioned earlier, 1st February 2013 to March 2014, we estimate this to be about 50 basis points of turnover.
Yeah. Just a second question on modern trade. What has changed in last, 1 quarter where not structurally, but till say Q2, modern trade was one of the key drivers, and which in a way is also important for premiumization that we keep talking about. What has changed in Q3 where we are seeing slower growth there?
I think we mentioned in the beginning, there are certain dynamics which are taking place in modern trade. Growth in the past has been a combination of same-store growth as well as new store openings. In the quarters prior to the current one which has gone by, we had net store additions. This quarter, we have seen more closures and less new stores opening, as a result of which the net store additions has been negative. That has impacted the aggregate growth of the modern trade channel. Like I again said, that I would read and think of this as a big trend. It does mean that organized players may be consolidating their business, getting their shape right, but going forward, there is absolutely no doubt in anyone's mind that modern trade will become a larger and larger contribution to the overall trade and to our business. And we remain committed to it. We are in a fortunate position that we have presence and leadership position, and our presence in modern trade is stronger than our presence in general trade. And as this trade and this channel increases its contribution to the total market, we will stand to gain.
Sure. Thanks a lot, sir. Thanks a lot for taking my questions.
Thank you.
Thank you, Mr. Deshmukh. The next question is from Mr. Hitesh Chida from Emkay Global. Mr. Hitesh, your line has been unmuted. You can go ahead and ask your question, please.
Yeah, hi, this is Pritesh. Just a couple of questions. One, from Mr. Nitin Pranjpe, the initial comments that you made vis-a-vis moderation of growth and the presentation talking about premiumization at slower pace. I'm just unable to resolve the math, and there's a disconnect in terms of, if you check the last 3-4 quarters, there is a moderation on volume growth on one end, but there is an acceleration in price-led growth, and we haven't seen any larger price actions in the main category. So, is there anything else to read in this math?
No, I think I don't want to make it more complicated, but I think there are some price increases which are not visible in the context of list price or MRP increases on the pack. So very often actions are taken in order to manage price point LUPs or single dose items to deal with the inflationary pressures which are there. When a price increase out there is taken, not by raising the price, but by reducing the grammage or the full levels in that pack, that has an impact of indicating that the volume growth has come down and the price growth has gone up. Now, we don't talk about this, but I think you've touched upon a very, very important aspect which needs to be looked at in conjunction to volume growth numbers that you would see. Because in many areas, particularly price point packs and single dose usage packs that we've got, What is critical for us to judge the health of that portfolio is the number of units that we are able to sell to consumers rather than the absolute volume, which may go up or down based on whether we are filling back or filling down. And what we are pleased is that the unit growth that we've got in that part of our business is substantially higher than the conventional volume growth calculations that we will see. So you will not see it reflected in our UVG numbers. It will get captured in price growth, but in reality, it is more of measure of our ability to increase our consumer franchise, which is what we are trying to judge. How many people buy our product and how often they buy it, which is reflected by the unit growth that we get in that part of the segment, in that price point of various categories. I don't know whether that helps explain what you had in mind.
Yeah, I think. Second, is there been off lately any pricing actions in the laundry segment, especially on the price cut side in the markets?
I don't think nothing material in the form of price cuts that you would see in the market, no.
Nothing, okay. Lastly, I just want to check, you gave a comment on the oral care and the double-digit growth. Maybe if you could extend the comments towards market share.
So I think we are pleased with the progress that we've made on oral care. About a few quarters ago, we had indicated that there were some things that we wished to fix. We were not participating in the premium segment, expert care segment, etc. We put those into the marketplace, and we are pleased with the progress that we are making there.
Okay. Just one clarification I had. In the royalty payment, the release, it's 1.4% of turnover. I'm just confirming this turnover when you mention it's turnover for the set of products, or it is for the entire company?
The company.
Okay.
So it is for the company. The total, and just the whole idea was to give a clear sense of what is the royalty cost impact that is currently there in our financial statements, and in the fullness of time, what that could go to. So
it's
it is on the turnover.
It's as a percentage of your net sales currently.
Correct.
Thank you very much, sir. Thank you. All the best to you, sir. Thank you.
Thank you.
Thank you, Mr. Teish. The next question is from Mr. Manoj Menon from Deutsche Bank. Mr. Menon, you can go ahead and ask your question. Your line has been unmuted.
Sure, thanks. Hello, sir. A couple of questions. One on gross margins to start with. If you look at the gross margin performance year on year, if you could help me understand in the context of some steep correction in some of the inputs, is it more of a timing issue, or is it a function of top-down where the pricing benefits have started going away substantially, so optically you're actually seeing a lower gross margin?
So, Manoj, hi. I think you're referring to, let's say, the margin after cost of goods sold, right? Because, when we talk about gross margin, just want to be clear, you're looking at revenue minus cost of goods sold.
Yes.
And that proportion has gone up by 40 basis points in the quarter.
Sure.
Clearly, there is a mix of portfolios that we have that obviously has an impact. So as you would have seen from the segmental growth that we talked about, where we had 20% growth in soaps and detergents, and a 13% growth or so in personal products, you can well imagine that, from a purely arithmetical mix perspective, what happens. I think the specific thing which I want to clarify is that soaps and detergents, our gross margin has improved. What we have done is invested additional amounts in A&P to make sure that we remain competitive in the marketplace.
Okay, that really clarifies. Thank you. Sir, second question on the royalty. One small question. You mentioned peer group. When you say peer group, is it consumer companies, or it would include let's say outside of consumer space in India?
As I said, that was more for reference. Of course, peer we talk about consumer companies, but that was more for reference. I think the more important point is we are we have been very clear in terms of making sure that the new agreement has undergone, or the new proposal which will lead to the agreement has undergone proper due diligence, and that it is going to be fair to HUL and to Unilever, and this will then enable us to continue to deliver strong and competitive growth alongside improving our margins, and thereby let us continue to win in the marketplace.
Sir, just very quickly for one bullet point question on wheel. Is it the standard pack implementation of November 1st one of the reasons to, let's say, to have lower volumes? Because today you have a 1 kilo at 43, wherein earlier it was more like 20 and 30 rupees sort of price points. I mean, is that an issue which is more transitory in nature?
So I think, again, like the previous question, there are other nuances that you asked, and I will help you understand this. I think there was some impact of changes on account of PCRO. There were even more significant impacts on account of changes that we made in order to hold price point packs like 1 rupee, 2 rupee, etc., and address grammages. And that has had a very significant impact on volumes, which you would notice. When we look at the business and we analyze that part of the business, we look at unit growth. And because the whole purpose is to reassure ourselves whether we are selling to more consumers and we are getting our consumers to buy us more often. And all I want to say is our unit growth are growing much faster than volume growth when it comes to that area. On wheel and in laundry, if you were to start thinking of volume growth, I think there is another aspect that you've alluded to, and I'll try and see if I can help you understand this. I think in categories like laundry, the general tendency to upgrade when people move from wheel to Rin to Surf Excel, etc., is a positive sign from a business point of view. It's a positive sign from a consumer point of view in terms of the better experience that they get. However, because the moving up means more concentrated products with higher levels of active and surfactants in it, the quantity which you need to use when you move from a wheel to a Surf Excel comes down. And therefore, upgrading of a consumer, which is what the normal trend is, leads to reported volume growth as we see it coming lower. And therefore, internally, as we start nuancing and understanding the quality of our performance in categories like laundry, we need to marry two things: unit price growth as well as how much active are we selling to our consumers, because that is a better reflection of the number of washes that they are likely to experience as a result of our portfolio. So I didn't want to get into this space as I was describing our volume growth story, because it introduces new dimensions, and we've never talked about all of this with our analysts. But clearly, as we understand and study the health of our business, there are many nuances which we need to get to, and not just look at a pure volume growth number which you get, especially as the secular trend we are going to see over the next many years is one of upgrading. And the best example I gave you is one in laundry, whereas consumers actually move from wheel to Rin to Surf. The absolute amount of quantity which we will use for the same bucket wash will start coming down. On wheel, the nature of issues that we've had I've explained earlier. We've taken those corrections, which are, like I said, on product quality in some areas, pricing in some other areas, and a general increase in advertising across the board.
Oh, absolutely.
So a slightly longer answer to the question that you asked, but I thought it might be of value for you and others to understand what other aspects are useful to get a feel for the overall health of our business.
Sir, absolutely, thanks, and that's very helpful. One absolutely last question, the Fair and Lovely transition issue which you mentioned, I'm a little unclear about it, particularly for a non-price pointed pack where a 1 rupee price point actually increase, really the volumes for more than a quarter.
Actually, you are absolutely justified in actually picking that up. Having said that, this is something that we